everybody. You're very welcome to another episode of More Sales Every Single Day Like Clockwork. My name is John Mullery, and on behalf of myself, Todd, and the whole MFA team, you are very welcome to today's live show. Whether you're joining live, if you are, let me know in the comments who you are, where you're from, and who you serve. And also, if you are going to be watching the replay afterwards, or you're watching the video afterwards, you are very welcome as well. So today we are going to be discussing the one metric that if you can focus in on this one metric, it can be an absolute game changer for your business. And I'll share what that metric is, why I wanted to share this training from Todd with you today, why it's so important, and why focusing on the opposite side of this metric can sometimes let you down in terms of you may feel like you're doing well in your marketing. You may feel like you're getting some results in your marketing. The reality is that if you're looking at this metric the wrong way, or if you're looking at the wrong side of this coin, you really kind of be letting yourself down big time. So we're going to be sharing what that one metric is and how you can tap into it a little bit later on. But for now, I just want to whet your appetite for why we wanted to do this training. Well, essentially, obviously, you may realize that we've launched our Todd's brand new book, The E5 Method, a couple of weeks back now, and people are already going crazy over it, and it couldn't be going better, to be honest. And one of the things that one of the main reasons for this training today is because the conversion rate on the sales page for the E5 Method book is crazy high. I mean, it's hovering anywhere from around 11 to 12 to upwards of 15 to 16% conversion rate on the sales page, which is fantastic. But the bottom line is, and as you're about to find out, that conversion rate doesn't really matter in the grand scheme of things. Now, while that is a fantastic conversion rate to have, and we are glad to have it and everything else, it doesn't really matter. There's another metric that matters a hell of a lot more than your conversion rate, and that's the metric we're going to be talking about today. Because if you can dial in this one metric in your marketing and you pay close attention to this and you focus on increasing this one metric more so than any other metric in your front-end acquisition campaigns, you will be golden. So, like I said, my name is John Mullery. I'm the Director of Marketing for Todd Brown. And on behalf of myself and Todd and the whole MFA family, you are very welcome to this week's live show, where we're going to be diving deep into this one metric that if you hone in on, if you focus on increasing, and you focus on mastering on your front-end acquisition campaigns, it will be an absolute game changer for your business. And that one metric that we're going to be talking about is your AOV, your average order value. Now, as you're about to see when we break into the training from Todd, so many people get caught up in conversion rate, get caught up in the vanity metric that is their conversion rate. And like I said at the beginning of this, if you're just joining now and you missed it, the conversion rate currently on our E5 Method book offer, which you can actually get a free copy of this book if you want to by heading to toddsfreebook.com. If you want to, hey Ben, you're very welcome. Ben Spiller, just seen your comment there, very welcome to the training. So again, the conversion rate on the offer for this currently is super high. It ranges anywhere from 10, 11 to up to 15, 16% conversion rate on the sales page, which is fantastic. But the bottom line is that that is a vanity metric. That really doesn't matter if our AOV isn't where we want it to be. Our AOV stands for average order value, and it is the one metric that you should be watching very closely and paying close attention to and focusing on increasing as much as possible in your front-end acquisition campaigns, because it is your AOV that tells you, that enables you to find out how much you can pay to acquire a customer depending on what level of acquisition aggression you're at. So say, for example, if your AOV is $100 and you're willing to spend $50 to acquire a customer, well then for every customer you generate at $50, your average order value is $100, therefore you're generating $50 profit on the front end on day zero. Now, what happens if your competitor comes along and say that they're willing to download I love the workbook download with the e-book offer. Cheers, Jason. Yeah, it's it's incredible, that workbook. And shout out to Michael Drummond, who did the graphics for that. It was fantastic work. And Ben Spiller, so Ben, not lifetime order value, average order value. So on day zero. So say for example, you have a front end acquisition campaign and you're generating customers every single day. And on average, on day zero, the first day that they become a customer with you, they spend, say, on average $100. So your average order value on day zero is $100. Now your lifetime value, that should be different. You should always be looking to increase your lifetime value, but average order value, AOV, is on the first day that they become a customer or become a client. Now over the next 30, 60, 90, 180 days, 365 days, your lifetime value may increase. So say for example, if someone, say your 30-day value might go from 100 to 200, your 60-day value might go from 200 to 250, your 90-day value might go from 250 to 350, or whatever the case is. But the metric we're focusing on today is average order value on day zero, the day that they become a customer. And why that is so important is that it enables you to figure out how much you're willing to spend to acquire a customer depending on your level of aggression. So say for example, like the example I gave, that you're willing to spend $50 to acquire a customer and your average order value on day zero is $100. So you're looking to make a $50 profit on every customer on day zero. Now what happens if your competitor comes along and they're willing to spend $75 to acquire a customer? Or they're willing to spend $100 to acquire a customer? If you're only willing to spend $50, they're going to win. But on the other side of the coin, if you know that your average order value on day zero is $100, and you know that in the next 30 days or in the next 60 days, your customers will go on to spend an additional $200 with you. So in 60 days, your value, your order value at day 60 is $300 now. Well, then you can be a little bit more aggressive with how much you're willing to spend to acquire a customer. And the more aggressive you can be, the faster you can scale, the more customers you can get in the door, and you can actually outprice or outbid your competition because they may not be willing to spend as much as you're willing to spend. And that's why AOV is so critically important. And that's why we want to dive into the training where Todd breaks it down step by step why you should be focusing on AOV.
So I've really over the years, I've come to really recognize how critical average order value is and how insignificant sales conversion rate is. It's so funny, it's so amazing to me that the majority of the online marketing community focuses on sales conversion rate. Sales conversion rate, we got 8%, 3%. What's your sales conversion rate? What are you converting at? The reality is this, and I want you to understand this. The reality is this, that you can't deposit sales conversion rate. You could have a 10% sales conversion rate and be losing money like crazy. You could have a 0.5% sales conversion rate and be killing it. I know because I've had campaigns that were at a 0.5% sales conversion rate. And you could be killing it, right? At the end of the day, it's about dollars in, it's dollars out, dollars in. It's not the conversion of that. It's, right, how much do you spend? How much do you make back, right? The reason why AOV, average order value, is important is because, and I'm going to get into a lot more detail in this, not tomorrow, the next day when we talk about how to grow big and fast, but average order value tells you how much you can afford to spend to get a customer. It tells you how much you can afford to get a customer. Listen to me. I don't care what your sales conversion rate is. I don't get caught up in sales conversion rate is a vanity metric. That's all it is. Like, to me, it's cool, but it doesn't tell you anything because, like I said, you could be 10% sales conversion rate, losing money. 0.5% sales conversion rate, killing it, right? Making bundles of money, right? And so the thing that I look at is how much are we making bundles of money or are we not making bundles of money, right? And part of that, a big part of understanding that is understanding average order value. Average order, for those of you, I'm gonna jump around a little bit and touch on some of the stuff that I'm gonna cover in a couple days, but for those of you that want to break even, you heard Carl talk about, that he's willing to spend $1 to make back $1, right? He's willing to spend $100 to make back $100 in terms of customers. He's willing to spend 100 on, or invest 100 on Facebook ads, in Google, and YouTube, in solos, in direct mail, whatever it may be. He's willing to spend 100. He's willing to spend 1,000. He's willing to spend 10,000. If that means that he makes back, right, 10,000 or 1,000 or 100, whatever it is that he spends in the form of new customers. What that's really about is that means that what it costs him, he's willing to spend what it is that he earns per customer to get a customer. He's willing to spend what it is that he earns per customer to get a customer. What is it that he earns per customer is average order value. Right, let me take a step back for 1 second and this always happens at every MFA Live. Something like this happens, and then we end up going till 9:30. But I'm doing it. Right? I'm doing it because I want you guys to get this. And so just bear with me, those of you that have heard me teach this a number of times. So listen to me, okay? I'm going to get yelled at later for this for sure. So in my own company. So check it out. So this whole business is built on front end and back end. Front end is all the marketing that you do with prospects. The front end marketing is all about turning prospects into new buyers. It's all about taking non-buyers and turning them into a first-time buyer. And the whole goal of the front end is to acquire customers, right? We're not looking, this business isn't about generating profits on the front end from that first transaction. This business isn't about making bank on that first transaction. That first transaction, the front end, the marketing that's done with prospects to turn them into new buyers is all about acquiring the buyer. It's all about acquiring that asset that is worth money. Like acquiring a stock that has a value today and you know that that value is going to go up in the future. The back end, all of the marketing that you do with buyers, with people that have bought once, twice, 3 times, 4 times with a buyer, the back end is where you make all of your profit. The lifeblood of your business is the front end. You'll go out of business if you don't have a front end. You'll go out of business if you don't have a front end, if you can't acquire customers, if you're not acquiring customers, because every business has attrition. And so every business will lose customers over time. And so if you're not replenishing that and adding many more, you will eventually go out of business. So, right, everybody follow me so far? Yes? Right? So check it out. So now we go back to average order value. So when we go back to the front end, there are 3 ways to approach that front end. For some reason, the front end is over here. Right here, in this specific area. There are 3 ways to approach the front end. 1, the way the typical mom and pop approaches the front end, which is they want to generate a profit on every transaction. Right? To the typical mom and pop business owner, the typical small retail owner. I feel like I've ignored you guys over here in this area. Haven't I really? This is the back end right here. Sorry guys, this is where all the money is made. But the typical, right, the typical entrepreneur, the typical mom and pop, they approach it as, I just want to generate a profit. I want a margin on every transaction. If I sell something for $100, I want to make 50. If I sell something for $200, I want to make 100. Whether I'm selling that thing to a brand new customer or to an existing customer, I don't care. Whether I'm selling it to a prospect to turn them into a customer or a customer to turn them into a repeat customer, for the mom and pop, the typical entrepreneur, there is no front end, there is no back end. The transaction is there for one reason and one reason only, and that's to generate a profit. They don't understand. They don't get it. They don't understand. And if I played out the math for you, I would show you how they are sacrificing a volume of profits for speed of profits. Because they want a profit on the first sale, they're actually losing out, right? I could show you that mathematically. That's the first way, and it's the way that I don't recommend anybody in here approach their business. The second way is break even. The second way, which is the way that I have all of our clients, almost all of our clients, with the exception of the ones that, are growing rapidly, have the cash flow, blah, blah, blah. The way that we start off almost all of our clients is break even. Break even means that you spend $1 and you make back $1. So to get a new customer. So I invest $100 in Facebook ads on the front end. All I want to do is get that $100 back. Right? Like, I want to get that $100 back, and I want to get that $100 back in the form of new customers, right? So I want to generate $100 worth of sales. Let's say I sell a $10 product, hypothetically, $10 product. So I'm looking to acquire 10 customers. If I could spend $100 and acquire 10 customers that each spend $10, that means I made my $100 back, but now I've got 10 customers. And the thing that I want you to understand is, right, that when you operate at break even, you're acquiring customers for free. The most valuable asset in your business. When you understand this business, right, it's the most valuable asset you have, customers, and you're acquiring them for free. If I invest 100 and I make back 100 and I now have 10 customers, I have 10 valuable assets that I can care for, that I can deliver value to, that I can nurture, that are going to buy more from me, are going to spend more from me, and I acquired them for free. My bank account is no less today than it was 2 days ago, except now I've got 10 more customers. Right? So it's at a bare minimum, every single one of you should be willing to operate at break even, right? And then the third level, how about I'll save the third level for, and Carl kind of mentioned it, but I'll save that for whatever day, Saturday. Because for now, what I want you to understand is that, so let's go back now to that second level, that break even. Well, what do I mean by break even? What do I mean by break even is this, to tie this together, is that what it costs me to acquire a customer equals or matches my average order value. If the average customer spends $10 with me and it costs me $10 to acquire a customer, right? My customer acquisition costs match my average order value, and I break even. And I acquire an asset, a valuable asset that I know is going to be worth more and more. And you'll understand in a couple days how we know that it's worth more and more, and how we increase that value, and how we increase the speed of that value, and so on. But that's the break-even game. Now, the thing to understand is this, to really drive this home, and I'm glad we're on like the second slide of this presentation, is that there was a time in direct response, and listen to me, get this. There was a time in direct response where your product price was the value of the customer. You sold a particular product, right? You run a small space ad, you generate a customer, you're selling a product for $50. Right? More than likely, the value of that customer, if we want to call it the average order value, it was $50. But today, because we've got funnels, because of technology, because we've got all these things that I'm going to share with you, we have the ability to add more value to a customer on top of just the main order, the main offer, the main product. Like years ago, when I first started, it's kind of funny. I love it when I hear people say, like, it's technology, it's so difficult today to put up websites. When I first got started, man, we were coding things in like Dreamweaver and Front Page. It was a cluster. It's never been easier today from a tech perspective. But when I first started, there wasn't a one-click upsell. There weren't those same the same strategies and tactics that I'm gonna share with you that many of you know. There weren't those things. And so it was very, very, very difficult to make certain offers work. Like, it was very difficult many, many years ago to make a tripwire work because it was very difficult to increase the value of that customer at the end of the campaign because we didn't have one-click upsells. You understand that things like one-click upsells, downsells, bump offers, all of these things, they've made it infinitely easier to increase the average order value, which gives us the ability to lower the initial price of our offer, to scale how many customers we get, and then increase average order value to pay for the customer acquisition costs. Did everybody get that exact thing that I just said? Like, you got that? You will. You will. Critical. And the thing to really understand is that, it's why I said sales conversion rate is a metric that we use internally at MFA or with clients, with top 1 clients, when we used to take on agency clients, paid us a lot of money. Sales conversion rate is just an optimization metric. We'll look at things like, let's say, if they're using a traffic captivation page, a lead capture page, a squeeze page, we would look at opt-in rate, sales conversion rate, order form completion rate, upsell take rate, to identify the constraint in the funnel, to identify the weak link in the funnel, to identify where we need to focus our optimization. But sales conversion rate doesn't tell you the viability of a campaign. Right? You understand that, right? You can't make a decision about a marketing campaign, whether you're going to continue running it, whether you're going to stop, whether you're going to scale it, whether you're going to stop, whether you should pay more to joint venture partners, affiliates, or whatever, simply based on conversion rate, because it's a vanity metric. It's a performance metric. It's not a viability metric, right? There's a difference, right? And so I look at average order value because average order value tells you exactly how much you can afford to pay for a customer. If you're willing to break even, well, you know that average order value is what it is that you can afford to pay to acquire a customer, regardless of your sales conversion rate. And the higher you get and this is the thing, the higher you get your average order value. This is the whole crux of why I'm sharing this with you. All of what I said to build up to this. It's a good shot that I probably could have skipped all of that and just said this. That, therefore, if you can, or I really should say, as we increase average order value, as we work on increasing average order value, we can afford to spend more to get a customer, and therefore there are more things that we can do and use and leverage to get customers. All else being equal, he or she who can afford to spend the most amount to acquire a single customer will win the game. If we were all in the same business, we were all teaching guitar, right? Which Charlie would hate. But if we were all teaching guitar, all of us, we had an average order value of $50, and Charlie had an average order value of $250, who's going to win? He would laugh at us, right? He would laugh. He could tell everybody, when you become a customer, I'm going to give you $50, right? And he would still make money, right? He could afford to spend so much more than we can. Therefore, his marketing could convert at such a lower rate. At such a lower rate, because if his average order value is $250 and ours is $50, right? That means the most that we can afford to spend to get a customer is $50. The most that he can afford to spend is $250. That means if we're paying the same amount for traffic, if we're paying the same amount per traffic, and he can afford to spend $250, and I can only afford to spend $50, his conversion rate can be a fraction of mine. Man, he's cool. He's happy. He's fine. So see, average order value gives you massive power because average order value equips you to pay more for customers. And the more you can pay for customers, the easier this game is. If I told you right now, every single one of you, that I am willing to financially back you, each of your businesses, and I am willing to pay $1,000 to get a single customer. Like, I'll spend up to $1,000 to get a single customer. So for every single customer, I'll front $1,000. You want 2 customers, $2,000. 3 customers, $3,000, and so on, right? How many of you would find it infinitely easier to run your marketing and make it work? Right? All of you, everybody. If you're not raising your hand, you don't understand something that I'm saying. All of you. And so that's why we look at and work on and focus on average order value. I really hope that you understand how critical this is. And this is the way that I really look at it, right? Going back to the whole, why don't we focus on sales conversions? Why do we focus on average order value? Why is average order value so important? And that's because this whole game of marketing, I've always said before, right, that direct response marketing, that what we do is a game of arithmetic. It really is. It's a game of math. It's a game of numbers. I don't mean numbers as in volume. I mean it's math, right? It's math like the way you would make a decision about investing in a business, right? Or a piece of real estate. If a building is worth $1 million and it's worth $1 million, like you had it appraised and it's worth $1 million, and somebody is willing to sell that building to you for $500,000, you don't need to be a rocket scientist to know that you're getting a good deal, right? It's a numbers game. It's mathematical. At the same time, if there's a building that's worth $1 million and you have to pay $20 million to acquire that building for $1 million, there's more numbers that you might have to look at. But it's numbers. It's arithmetic. This is a game of really, like I say, of financial exchange capability. Your ability to exchange money, a certain amount of money, to get a customer that's worth a certain amount of money today and then worth that much more in the future. Right, see, those of you that were here last year maybe saw, or I've talked about this a number of different times I talk about this in Acquire and Monetize, my academy. I talk about this in the E5 Masterclass. That is this. When it comes to customer acquisition, I think like an investor, and I want you to think like investors. See, you're investing in the acquisition of assets. What are those assets? Those assets are customers. Those customers, those assets have a value today. What's the value today? When I say today, I mean the day that they become a customer. What's the value today? The value today is your average order value, right? It's the average amount of money that they spend. When you acquire a customer, you know that every customer that you acquire today, tomorrow, the next day, the day after, has an average value, right? And so you know that they have a value today, and then over time, as we grow your business and scale your business and pump more customers in there and we roll out the back end, you know that you've got a future value, right? Or what we would refer to as your lifetime value. A customer might have an average order value. They might spend $100 with you on day 0, the day that they go through your campaign, the day that they become a customer, and then they might spend another $900 with you over the next year, meaning that there's a total value of $1,000. So when you think like an investor, right, you get to this point where you say, well, there's an asset that's worth $100 today, and over the next year, it's going to be worth another $900. Therefore, what would I be willing to invest to get that asset today? It's worth $100 today, or it's going to return $100 to me in my pocket. It's going to return $100 to me in my pocket today, the day that I acquire it, and then over the next year, it's going to return another $900. Right? And so when you think like an investor, you realize that, like, at a bare minimum, only an idiot wouldn't invest $100 to get that asset that puts $100 back in your pocket immediately and then puts another $900. It's like free $900, right? You acquire a stock you pay $100, you get back $100 and the stock, and you know the stock based on your metrics is going to appreciate and bring you another $900. That's how you think like an investor. That's why I say that it's a financial exchange. It's all about financial exchange capability. There's an asset that's worth a certain amount today and worth a certain amount in the future. It's more about what can you exchange to get that asset. It's not about conversion. It's about that financial exchange.
So like Todd just talked about there, AOV is critically important. And I see we have a couple of questions that have come in to the comments, and I'm going to be covering those in a minute. But I just want to quickly summarize what Todd has talked about there and the critical importance of average order value. And when you understand average order value, it gives you so much freedom. It enables you to understand how much you're willing to spend to acquire a customer. And like Todd mentioned, he who spends the most will win. If your competitors can spend $250 to acquire a customer and you can only spend $50, you are not going to survive this game, especially when you start scaling your offers through paid traffic. And you just simply can't do it because your competitors are willing to spend more. So we do have a couple of questions. We had a question first from my man Jason. So Jason says, when selling common products to an existing market to get new customers for a product-based business, do you test different popular products as loss leaders, or do you bundle products to show excess value for the price, or both? So essentially, Jason, what we're doing with our front-end products is we want to, depending on the type of offer it is, whether it's a free plus shipping offer or whatever the case is, generally speaking, we want to look at what the market's what the need in the market is right now. And we go through a whole process of putting together what's called a SIN offer. So, superior, irresistible, or no-brainer offer. But essentially, we look at the market need and we look at any gaps that we can fulfill. And also on top of that, we look at like some front-end product ideas that could be useful. Is if you take your core offer, your back-end offer, you might splinter out components of that might be good front-end offers, or you might do what's called a one problem, one solution type offer. So there may be a particular problem that your target market are having, that your ideal customers are having, that you can solve. Well, then why not solve that for them in a front-end product? Get them in there, solve one problem for them, and then ascend them onto your other offers. So hope that answers, but it's not just necessarily about, testing lots of different popular products as loss leaders or bundling different things. As part of a SIN offer, there are components that go into that in terms of your deliverables. You might include some over-the-top bonuses and so on and so forth. But the bottom line is with any offer that you put out there, whether it's a front-end offer or a back-end offer, you really want to make sure that it is a SIN offer, that is superior to other offers out there, that is irresistible to your target market, and it is an absolutely no-brainer. So say, for example, with our offer for the E5 method book, which you started to go through and everything else, you can see that the offer for the E5 method book is not just the book, it's a bundle of some of our best stuff, because we know that if we can get you in the door and you start consuming not only the book, but the bonuses that come with it and everything else, you will be hooked line and sinker into our methodology, into the E5 method, into Todd's way of doing things, and we can get you in the door and we can continue to add value to you, and over time your lifetime value will increase. So our average order value on day 0 for the E5 method book is X, but we know because we've created a SIN offer around the E5 method book that our lifetime value is only going to increase as well as we continue to introduce more offers into your space and release more offers, and a combination of adding value to you while also increasing the amount of offers that we make. But because one mistake that people make is they get a customer in the door and then they never make another offer to them ever again, when the reality is you're kind of doing yourself a disservice, but you're also doing your customers a disservice, because whatever problem you're solving with your front-end product, that's not the only problem that your customers have. That's not the only problem that your clients have. They have additional problems, they have additional needs, they have additional desires. And if you can fulfill those desires and you don't fulfill those desires, well, then you're doing them a disservice, you're doing yourself a disservice, and you're doing all the amount of profit that you're leaving on the table an absolute massive disservice as well. So hopefully that answers your question. So Magdalena's question, and just I see your comment there, that's my favorite one problem, one solution. Yeah. So Magdalena's question was, is it true that conversion rate is important when accounting your cost per lead, taking a step back before we account the AOV, taking back into account? So it's not that conversion rate isn't important. It is an important metric to be aware of, but it's not a metric that you can make business decisions on. I mean, you can't make a decision whether to scale a campaign or to not scale a campaign on your conversion rate, because conversion rate only tells part of the story. The conversion rate will only tell you how many people are converting to hit the page. It doesn't tell you any kind of financial numbers that you can take to the bank, like what's your average order value on day 0. It doesn't tell you that critical number, and that's why AOV is so important, because it completes the whole jigsaw if you want to look at it. Because when you understand what your average order value, like Todd talked about, it changes the game, because you could have an average order value of $200 and a conversion rate of 0.5%. And if you were just looking at the conversion rate of 0.5%, you might say, well, it's not converting quite well, when the reality is your average order value is $200 and it's costing you a certain amount to acquire a customer. So we have what's called the golden ratio. So it's our CPA, it's our cost per acquisition. And then we have our AOV on the other side of the golden ratio, which is our average order value. So if it's costing us $50 to acquire a customer, but for every customer we acquire, our average order value is $100, we know that our ratio there is we're making $50 for every customer. But now if our CPA rises to $100, we're still no better off, or we're still no worse off, sorry. So it's now costing us $100 to acquire a customer, but our average order value is $100. Therefore, on day 0, we didn't lose any money, but we gained an asset. We gained a customer that we know that if we continue to nurture, continue to add value to, and over the next 14, 30, 60, 90, 180, 365, 2 years, 3 years, 4 years, 5 years, we can increase that lifetime value. And all of that money afterwards is pure profit, because we've already bar a couple of other, if you're doing any kind of retargeting stuff, but generally speaking, all that extra money is all profit, because you've already acquired the customer. And like we say so many times, the most difficult thing you will ever do in your business is acquire a customer. Once you have that customer, and if you look after them and you continue to add value to them, you continue to put offers in front of them, and you will increase your lifetime value, and you will it will enable you to have that much more freedom, because you're truly now starting to focus on front end and back end marketing. And that is the key to direct response marketing, that your front end is all about maximum customer acquisition and your back end is all about maximum customer value. Hopefully that answered your question, Magdalena. Yes, that's true. It was not sufficient in my product business, even though I've had a high conversion rate, but the AOV was just slightly over break even. I mean, having the AOV slightly over break even is not necessarily a bad thing, especially if it's a front end campaign. I mean, you're essentially acquiring customers for free, and if you have a back end offer, so say for example, if your front end offer was an online course, say for argument's sake, that you're selling, an online course that you're selling for say $200, and then you have a back-end coaching program that is $5,000 or $10,000. Anybody that buys your front-end offer for $200 and you break even, or your AOV is slightly over break even, so say your AOV is $210, I mean, you're essentially acquiring customers at a $10 profit each. So then out of those, say 100 people buy your course, or out of 1,000 people that buy your online course, say 1% of them or 2% of them go on to buy your coaching at $5,000 for 90 days or $10,000 for 6 months, or whatever the case is, whatever your back end offer is. I mean, that's all pure profit then, because when you make that distinguish between front end and back end, and you focus the lion's share of your front end marketing around maximum customer acquisition, and then you focus your back-end marketing around increasing the lifetime value of your customers, the dynamic changes. So in this scenario, you have a front-end offer or multiple front-end offers if you're a little bit more advanced, and then you have a back-end offer or multiple back-end offers if you're a little bit more advanced. But the bare minimum, you have a front-end offer to acquire maximum customer acquisition, and then your back-end offer is about maximum customer value. So hopefully that answered the question, Magdalena. If it did, let me know in the questions. And what I want to do is that if anybody is watching this and you haven't got your copy of the E5 Method book, make sure you go head on over to toddsfreebook.com. You can get a free copy of this book. Not only a book, like I said, it is a sin offer. It's a superior, irresistible, and no-brainer offer. There's a massive bonus bundle that comes with it. It's a ridiculous offer. At the end of the day, it's beyond ridiculous, and we're stepping above and beyond the norm in actually delivering value to you, because we know it's going to come back to us in spades. So if you do want to get your copy of Todd's brand new book, head on over to toddsfreebundle.com. Similarly, if you want to take a step back on things and actually not just look at your AOV or your cost per acquisition, but want someone to take a step back and look at your marketing as a whole and see where the gaps are and see where the constraints are that's holding you back, you can head on over to learnfromtodd.com and you can book a call with one of our E5 strategists, and they will walk you through exactly what you need to do to go from point A to point B, exactly what you need to do to remove those constraints, remove those shackles holding you back. And if you qualify, we'll also walk you through how you can get Todd's personal help over the next 8 to 10 weeks and actually mapping out a campaign that not only maximizes your AOV, but also maximizes the amount of clients, amount of customers you can get from just one campaign. So if that's something that you're interested in, you can head on over to learnfromtodd.com and book a call now. So Magdalena says, I'm now improving the back-end offers with my coaching business based on what I've learned in the product-based business. Awesome stuff. What you said just boosts my confidence. Absolutely. I mean, once you get that, Magdalena, once you get the fact that you're in the front-end marketing business and the back-end marketing business, once you get that that's what your marketing is all about, everything changes. And the metric that drives that on the front end is your average order value. Because like I said, if your average order value is $200 and you're willing to spend that $200 to acquire a customer, and your competitors are only willing to spend 50, like Todd said in the training, you could literally give all your customers $50 back and you'd still wipe the floor with your competition because you're willing to spend more to acquire a customer. And he or she who spends the most to acquire front-end customers will always win, especially when they have a fantastic back-end in there as well. And if you have a back-end offer and you have a system for sending your front-end customers into your back-end, you will win every single day. So guys, if this was valuable, let me know in the comments. And thanks for watching. And if you want our help in actually implementing this type of stuff into your business, actually walk you through what constraints are in your business, where they are along in your front end funnel or in your back end funnel. The constraints are along all of your offers. If that's something you want help with, you can head on over to learnfromtodd.com. You can book a call. One of our E5 strategists will walk you through exactly what you need to do to go from point A to point B in your business. Regardless of where you are, as long as that you're already successful in business, you're already selling your product or service consistently enough, but you want to get to that next level, you want to start to scale, you want to get more customers, you want to get more clients, you want to generate more profit, well then head on over to learnfromtodd.com, book a call. There's no obligation, there's no crazy sales pitch or anything like that. Yes, we do have an opportunity to work closely with us over the next 8 to 10 weeks, but we don't force it on you. If it's a fit for you, we will offer it to you. If it's not a fit, we won't. We'll part as friends, and that's pretty much it. So thanks for joining us, and thanks again, and we'll see you next week at Thursday at 2 p.m. Eastern.
Yes, we teach marketing, but what we really do is change lives. That's the business we're really in. We just happen to do it through marketing education.
Like, people ask me all the time, they say, well, why don't you just go out and sell some widget, man? Like, and look, I can. There's no doubt. But what excites me more is to know that I get the good fortune. I'm blessed to just be able to give to other people what it is that I've learned and watch their lives change. Right? We communicate with real people every day with real dreams, real families, real fears, real needs. Or when somebody posts a picture online of something that they just bought their spouse, a MacBook Pro, or even cars, or we see somebody that is moving into a new home, or maybe their first home that they've never owned before. And I just know, man, that we're changing lives. There's just something, man, about seeing other people soar that juices me up.